Welcome back, fellow investors. Today we are diving into the fascinating world of exchange-traded funds, and specifically one that has caught the attention of many for its consistent performance and impressive dividend growth. But before we unveil the predictions for the future, let's unravel the story behind this financial powerhouse. Meet SHD, the Schwab U.S. Dividend Equity ETF. Now, what makes SHD a standout in the crowded ETF space? It's not just about high dividends. It's about a dividend that has been on a consistent upward trajectory year after year. SHD tracks a market cap weighted index of 100 dividend-paying US stocks. And what sets it apart is its strict criteria, a 10-year history of paying dividends. This isn't just an ETF. It's a testament to the power of enduring financial stability. How has SHD been faring in the recent market hustle? We've seen some underwhelming price appreciation, no doubt. Over the past couple of years, SHD seems to have taken a breather in the race for capital gains. But hold your horses. Let's not judge a book by its recent cover. When we zoom out and compare its performance to broader market trends, a more nuanced picture emerges. Join me as we dissect the numbers and uncover what's been happening under the surface. But why the recent plateau in SHD's price appreciation? Are there underlying factors at play, steering this ship into calmer waters? Economic struggles, global uncertainties, and market conditions. These are just a few of the puzzle pieces influencing SHD's recent performance. The markets have been a bit of a roller coaster lately, and SHD, being a reflection of its underlying assets, has felt the ripples. Today, we will explore these factors, separating the noise from the signals and understanding the dynamics shaping SHD's journey. Now that we've got a firm grip on SHD's journey, let's dive into the composition and strategy that sets it apart. SHD, the Schwab U.S. Dividend Equity ETF, employs a meticulous approach in selecting its dividend-paying stocks. It focuses on companies with a 10-year history of consistent dividend payments. But that's not all. SHD uses fundamental screens like cash flow to debt ratio, return on equity, dividend yield, and dividend growth rate to build a portfolio that stands the test of time. The objective? Quality companies with sustainable dividends. Individual securities are capped at 4% and sectors are capped at 25% of the portfolio. This strategic approach keeps risk low and ensures that SHD remains a stalwart in the world of dividend ETFs. In a head-to-head comparison, SHD proves to be a formidable contender among dividend ETFs. Over the past decade, SHD has consistently mirrored the total return of the S&P 500. However, what truly sets it apart is its robust dividend yield, currently standing at an impressive 3.5 to 4%. Let's break it down. First, performance. SHD has demonstrated resilience, aligning closely with the performance of the S&P 500. This consistency positions it as a reliable performer in the dividend ETF space. Second, dividend yield. SHD boasts a dividend yield that surpasses many of its counterparts. With a yield ranging between 3.5 to 4%, it outshines ETFs in the same category, providing investors with a steady income stream. Third, suitability for investors. SHD's strong performance and high dividend yield make it a compelling choice for income-focused investors. Its balanced approach and adherence to quality companies with sustainable dividends further enhance its appeal. When compared with the other dividend ETFs, SHD emerges as a standout option, offering a blend of performance and income potential that sets it apart in the market. One of SHD's most commendable features is its phenomenal dividend growth over the last decade. To put this into perspective, let's delve into the numbers. The compound annual growth rate for SHD's dividend over the past 10 years has been an impressive 11.3%. This means that, on average, SHD's dividend has grown by 11.3% each year. Why does this matter? It's a testament to the fund's commitment to delivering increasing returns to its investors. Picture this. An investor who bought into SHD 10 years ago would be enjoying a dividend payout that has more than doubled. This consistent growth isn't just a number, it's a strategy that positions SHD as a reliable source of income for long-term investors. Now, let's bring out a powerful tool in the world of finance, the Rule of 72. This rule helps us estimate the time it takes for an investment to double based on its average annual return. With SHD boasting an impressive historical average return of around 11% since its inception in 2011, we can apply the rule of 72 to forecast its potential doubling. The rule of 72 is simple. Divide 72 by the average annual return to get the number of years it takes for the investment to double. In SHD's case, with an average return of 11%, we find that it could potentially double by 2032. This calculation provides investors with valuable insights into the future growth potential of SHD based on its historical performance. It's Gentleman's Finance channel, and if you found any value so far, please like and subscribe. Now, to navigate the future landscape of dividends, we need robust forecasting tools. One such tool is MarketBeat.com's dividend calculator. This tool allows investors to input key parameters such as the current share price, expected dividend yield, and expected growth rate. By utilizing this calculator, we can paint a vivid picture of SHD's future dividend. Let's consider a scenario where an investor buys 1,000 shares of SHD today at the current price of $746. With a conservative dividend yield of 3.49% and a growth rate of 8%, the dividend payment could potentially grow to about $7,100 per year in a decade. Powerful tools helps investors gauge the long-term impact of dividends on their investments, shaping a strategy that aligns with their financial goals. As we navigate the current economic landscape, it's crucial to tailor our investment strategy to the prevailing conditions. In 2023, economic challenges loom large, with potential recessions and financial uncertainties on the horizon. The strategy for SHD in the coming months involves capitalizing on these challenges. I see the present as an opportunity to accumulate more SHD, with markets likely to face turbulence. I believe these moments represent the best prices we will see for the excellent ETFs like SHD in the next decade. Therefore, I plan to increase my SHD holdings over the next 3 to 6 months, anticipating that these turbulent times will be the launching pad for the next bull market. It's a strategy rooted in the belief that the current downturn is a temporary setback, paving the way for the future growth. Looking beyond the short-term turbulence, my long-term outlook on SHD is optimistic. Based on historical performance and future growth predictions, I anticipate SHD doubling in price by 2032. This translates to a share price in the range of $120 to $150 by 2030. As SHD continues to grow, it plays a crucial role in my strategy for achieving financial independence. The consistent dividend growth, coupled with the potential for substantial price appreciation, positions SHD as a cornerstone of a diversified investment portfolio. This aligns with my broader strategy of building a resilient portfolio that not only weathers market storms but also propels me toward financial independence over the long haul. Now that you got understanding about my SHD prediction, you might be interested in watching a video about how $50,000 investment in SHD ETF will generate passive income for a lifetime. If you found any value in today's exploration, don't forget to like, subscribe, and hit that notification bell. Until next time.